Good morning. Audio visual check. Can everybody see my screen okay and hear my voice all right? Testing 1, 2, 3, 4. 1, 2, 3, 4. All right, let's make sure that's up there. No. Roger that. Thank you. Good morning, everybody. And let's get started. Yesterday, we spoke a little bit about the 4 phases of learning here with time signals and my desire to consolidate 16 years worth of knowledge into 16 weeks of progression. Yesterday, we, I think, successfully discussed phase one, which involved a cursory entry level understanding of time signals and sort of working our way through what patterns people perceive originally, buying being a white dot or a green dot, a white line on the histogram, and selling being a red dot or a blue dot, a blue line on the histogram. And we just sort of interpreted these at face value to understand that historically the selling times were evidence of selling behaviors and buying times were evidence of repetitive buying behaviors. This is a pretty controversial um, method, and I'm continually illuminated by a range of vitriolic comments in the sections surpassing our ads. People have no problems being told things that they accept, like fair value gaps and VWAPs and closing the gaps and filling the gaps, pants from the gap. But when you mention the element of timing, we are relegated to comments involving things like fraud and BS and let your imagination run. I've heard just about everything. And so we applied 4 rules-based system signals setups to this phase one understanding of time signals. I felt successfully yesterday. We deployed the signal with trend, the puncture, the aggressive counter trend, the crossover, and we simultaneously followed through on the CETOs, the close in the direction of the signal. And armed with just those 4 setups and the times that the program had found were repetitive lately and of importance, it was a net profitable session. So let me just caution before we move forward in the Parthenon of setups today, and we're going to look at these 2 branches of progression next, that it's okay if you stop here. This is all you need. And you're not required to trade these signals the way that I've delineated these rules. These are just suggestions, they're prompts, and I fully expect that most of you, if not all of you, will put a unique spin on the setups as they arise in your respective universes. You'll pair them with ways you've been trading for years and unique combinations and permutations. Um, I have been a technologist, a futurist, an engineer now for over 20 years, and I can point at things that are BS and fraudulent. Um, we can look at directly and point at things when someone tells you they can do dozens and dozens of tests from a few drops of blood, that's probably BS and fraudulent. When someone tells you that if you only give them $250,000, that they'll ship you a Roadster in the following year, and it's been 7 years since that, that's probably fraudulent. If someone tells you that the Boring Company, for example, will connect the Las Vegas airport and the hotels on the Strip with a sled-driven 200-mile-an-hour high-speed rail equivalent system, that's probably fraudulent. But as we move forward into the timing signals today, there are some signs that nature, in the same sense that Fibonacci retracements are valid and profitable for many people, there are some signs that the farther we go into timing signals, there's even more than signals with trend and crossovers. There's even more than punctures and aggressive counter trends. There's even more. If we develop a proficiency with these times in the first stage of learning, time has more to give us, in the same sense that Newton didn't stop with studying how apples fell from trees, right? That old story about gravity's discovery. Gravity was always there. Gravity wasn't discovered in the same way that North America wasn't discovered. There were people here. There were people here. The Vikings had come. People from Africa had come. People were all over the Caribbean. There were all sorts of things that were claimed to be discoveries that were just people learning more about something that was already there. And so what we're going to look at here today is what happens when you study time signals more. And we'll find that it's not exclusive to data mining like Warp or Chronos, that the things we're about to learn about point to a far deeper well, that nature has a lot to say about when things happen. So one thing I'd like to do is sort of direct your attention to this chart, which is a chart for Bitcoin. And on this chart, we're looking at signals that are based on the distance of the moon to the Earth. And you'll see that we have, let me load a few more years worth of signals here. We'll do 900 days. For every green dot on my chart, the moon is as close to the Earth as it can be. For every red dot on my chart, the moon is as far away from the Earth as it can be. And what we start to see is that the signals bear a striking resemblance in terms of their predictive nature. We know when they're coming in the future, and what happens when we arrive at those times in the present. Very similar to what we're seeing on markets like the E-mini S&P using data mining. And what I started to notice after a little while was that there were weird signals where something didn't quite make sense to me. And I'm going to point out a few things on both charts today as we start to go deeper. I started to notice, for example, if there was a prior swing high and the market came up and put in a brand new high, you'll notice that right here at a buying signal, we have 3 candles, 1, 2, 3. This candle was a higher high. This candle of the signal wasn't, and the candle to the right of it was a higher high. The market stops here. It doesn't go up. It stops going up. When normally, when you get to a green dot, you sort of have this leg that sort of flies up. Let me show you another example on the E-mini S&P on a daily chart using moon phases. And if you'll give me a little bit of rope here, I promise there's a payoff. And if you look on this chart here, the green dots are now full moon signals on the E-mini S&P. In fact, we'll just come here and I'll put vertical lines through all of them. And you guys will notice, very similar to the Bitcoin signal, that we have a prior swing high. And as we come into the full moon signal, we're putting in the highest of highs. So here's our signal. The candle to the very left of it is higher than the prior swing. This candle is lower than that. And if we look at the highs here, it was 6,800. The candle to the right of it is 6,802. And then the market goes down, just like it stopped on a dime with Bitcoin. And what we start to see emerge here, if we look for those same types of signals on the E-mini S&P, let's see if I can find one here real quick. There are moments in time where if we look at the location of a buy signal in relation to the structure the time arrives at, signals go backwards. They reverse completely, meaning the buy signal behaves. We'll come up to a higher time frame so it's less congested. The signal behaves like a sell signal. So on this chart, I'll put a vertical line through this signal here as well. You'll notice 2:30 this morning that the market had a prior swing high right here. And then right on this buy signal, you'll notice there's a blue arrow with a hollow dot and the number 5 underneath it, where we arrive at that signal and it drops completely down. Kind of curious. And it's not by itself. There are other variations of that signal. For example, we're at a brand new structural high at 9 o'clock in the night last night, and the market stops and begins to drop down. And so as we start to look backwards in time, we see that there are these really weird moments where when the buying signal arrives at a point in time where price is at a structural high, a new structural high, you'll notice that almost every instance, it starts to drop instead of go up. In the same way that when we're looking at this Bitcoin signal and we arrive at a brand new structural high at a perigee event, the market behaves like it's a sell dot. It just stops and starts to drop. And when we look at a full moon signal on the E-mini S&P and we arrive at a new structural high at a time that is historically a time we go higher and higher, the market tends to, this is on a daily chart, drop. So as we look at the next phase of learning, what we start to see emerge is that there are these inversion patterns that begin to appear. How many of you at home right now have sat there watching a signal? You're waiting for a buying time, you're waiting for a selling time, and when you arrive at it, it goes in the exact opposite direction. It forms a pivot, but antithetical to the direction you were expecting. You're like, oh my gosh, it spun on a dime and went against me completely. Well, you start to see those over and over and over again. And we created a guidebook to help understand, as we saw these patterns appearing, what would happen if we put rules associated with them. Here we go. For example, we started to notice this very thing I'm talking to you about. and we applied mechanical rules to the occurrence. If we arrived at a predictive buying time, whether it was from Warp, the NinjaTrader data mining signal, whether it was from Chronos, the TradingView data mined signal, the full moon, or the perigee or a solar high in a sunspot environment, the market would invert. It would reverse. And so here's an example of this pattern from 2016 when I first discovered and or focused on these patterns. And I would notice, hey, when we get to the buy signal, did it meet the qualifications and what would happen afterwards? So this exists. It's a word in a language we didn't know the definition of. And when we heard someone say it, it made no sense to us. But when we applied a definition to it mechanically and said, hey, when you see this, in Warp especially, we can program that in, and the program now would point out to us when those things were happening. Now, the same things were happening at brand new lows when we arrived at selling pressure times. So here at 215, you'll notice there's a prior swing low, and then we make a brand new low at a selling pressure signal. Well, that's not the only place we see that. For example, if we look at the third quarter phase right here, that's a selling pressure signal. To the left of us is a prior swing low. And you'll notice if we look at the three candles, the one to the left of, the signal of, and the one to the right of, this candle is a brand new low in relation to this prior swing. And in fact, if we come back and look at Bitcoin, we'll see another example of this. Let me see if I can pull one out from the ether. There we go. So if you look at the selling signal here, the apogee, the candle to the right and the candle to the left, you'll notice there was a prior swing low. There was one here. There's an even bigger one here. But right here, where the selling pressure signal candle closed, the candle to the very left of it is a brand new cycle low. And if we applied the same mechanical rule set that we just applied in the book for the pattern 5 to Bitcoin with a selling pressure signal, we gave it a number because it's the fourth one we discovered. And we said, hey, when this happens, if we arrive at a selling pressure time and either the candle of the time, the bar to the left or the bar to the right, a 3-bar window, if any one of these candles, the time signal, the candle to the left of the time signal, or the candle to the right of the time signal, are new structural lows. When we learned the definition of that word, again, 2016, we started to notice that the price action immediately following that signal, that unique time price action pattern, would start to go up and not down. An inversion pattern, inversion meaning backwards. And so if we compare that result to what happened in Bitcoin the next day, 1, 2, 3, it went up and almost made a new high. It marks a low in the price action. The same way that, again, now that you know what the pattern is, here's a buying signal right here. There's the prior swing high. The candle to the left of it is a brand new high. The candle of the signal isn't, the candle to the right isn't, but this candle was. And watch, when we apply that mechanical definition, all of a sudden, we've learned 2 new words in the language of time, and the reaction is the same. It forms a high and inverts and goes down. The same thing is happening over here. Prior swing high, brand new high. This is the candle of the signal. This candle is a higher high. The candle to the right of it is a higher high. I'm not using any software. I'm just using my eyes and the distance of the moon to the earth. And you notice that the very first reaction is to pull down. Well, what happens if it keeps going up? If you scroll further down in this histogram book, you'll see that we started to have an understanding of how to trade with those signals. And that's what I'm going to look at with you here this morning. So now if a pattern 5 forms, we have this code about, hey, this is what we usually see it doing, staring at it for 2 years now at the time. When you have a higher high at a buying pressure time, it will tend to put a hook and drop down. It'll tend to put a hook and usually come all the way down to the moving average and maybe keep going. It forms a pivot here. Same way this thing started to recede, having come up. Well, if we're trend traders, we're waiting for a puncture of the new high by about 2 ticks. And then we trade it as it breaks through that puncture point right here. We go long only if and after it comes through the prior swing high and then goes up, because in the beginning, there's almost always a hook down, a backwards hook. Does this make sense? We started to see that there are signals in time, and if we're watching for them, they'll go in the opposite direction. So here's an example of a pattern 4 and how it starts to go up instead of down. And then as we start to circle through and go through on Warp, we're able to program in these definitions and see another example of a pattern 4. We arrived at 655 at a brand new low in relation to prior structure. The candle to the left of the signal was a brand new low. The candle of the signal was a brand new low. It inverts and goes up. So what we want to talk a little bit about today, pattern 4, brand new structural low, it inverts and goes up. Acknowledges what we're seeing. It acknowledges that this is real. There are patterns based in time when we incorporate structure. Where is the signal in relation to structure? At reverse. And so now when we come back to our phase guide, right around the 8 to 12 week range is where you come to terms with it. And you say, this happens a lot. Why does this keep happening? Why does the buy signal go down? Why does the sell signal go up? This can't be a coincidence. How many of you have seen this in your own chart and been frustrated by it? You immediately say, this signal didn't work. This signal stinks. This program is garbage. I've said those words, transitioning from phase 1 to phase 2, only then to realize the signal was correct. It was a misunderstanding of what was happening in relation to time because I wasn't fluent in the language. It's sort of like saying the market didn't pull back to 38% and go up. It pulled back to 50% and went up. This 38% retracement is garbage. Well, no, there's more to it than the one thing. So inside of the book, I tried to put as many definitions as I could, putting pen to paper. And the two most prevalent patterns are 4s and 5s. They're the ones that appear the most often. And if you're a top and bottom picker, they are by far the best assets that you have inside of the Parthenon of trading signals. If you see a pattern 4 at a support level, it is an area of extremely high probabilities of reversal. If you see a pattern 4 at a VWAP, if you see a pattern 4 at a pivot point, a floor trader pivot, if you see a pattern 4 with a 3-bar reversal pattern, if you see a pattern 4 almost always accompanied with a volume spike, if you see a pattern 4 accompanied with a PVT signal or a firefly signal or a broadhead signal, this is an area where reversals are likely to occur and the risk is just underneath the pattern. It's the lowest risk signal, but we're bucking trend here. We're picking tops and bottoms. Similarly for pattern 5, pattern 5s are emblematic of the exhaustion of a move up. They will almost always accompany a pivot back to the downside. And if it continues to break through its own highs, that breakthrough is emblematic of a monstrous, impulsive, momentum-laden move. It just shoots through and keeps going. There is hysteria in the market if a pattern 5 continues and goes up. These things have a nature associated with them. So pattern 1 and pattern 2 that don't meet these qualifications, they are Labrador retrievers and golden retrievers. Pattern 4s and 5s are pit bulls and chihuahuas. They have their own unique mannerisms and personalities. And there's, for me, tremendous relief moving from phase 1 to phase 2 because I know how to deal with it now versus just saying, well, that buy signal sucks. It didn't work. It was garbage. It doesn't stop here, and we're not going to focus on the secondary patterns too much today because there's a lot of ground to cover. But there are variations of these inversion patterns that they're sort of like altcoins. They're not the primaries, but there's an entire little ecosystem of signals that similarly behave with an inverted nature. A pattern 6, for example, is like a pattern 4, but the candle isn't a brand new low. It just has to appear inside of the body and wick of the brand new low candle. It is engulfed by the brand new low, and it starts to reverse and go back up. A pattern 7 is the opposite of that. The buying signal is simply engulfed by this monstrous high wick, low wick, big bodied brand new high candle. Pattern 8 and pattern 9 have probably the subtlest variations. We just need to see 3 higher highs in a row terminating at the buy signal or 3 higher closes in a row before we see an inverted response. Higher high, higher high, higher high, not structurally, but related to the 3 candles of the sequence. Higher high, higher high, higher high, reversal. Okay? Pattern 8, same thing. Lower low, lower low, lower low at a selling time. Lower close or lower close or lower close at a selling time. Lower low, lower low, lower low. Lower close, lower close, lower close. Pattern 8. We would ordinarily, it's not a pattern 4, it's not a pattern 6, but now we start to notice, hey, there's this sequence that happens, and when it happens at a sell signal, it goes backwards. So when we're migrating from phase 1 to phase 2, you start to notice these things. What I'm hoping to do today is expose you to them and explain that they exist, that they are not problematic. They're emblematic of our ignorance of what happens when we arrive at those times. And so now, whether we're looking at a chart here is the E-mini S&P on a 5-minute chart. There was a pattern this morning on the London Open right there. And you'll see there's the prior swing low. Market came down, put in a low, came up, and then dropped through it. And now right here at the sell signal at 5:20 when the London market was opening, it's a brand new low. Okay, that same thing happens just alongside the 7:10 signal this morning. And now that you know that, now that the program is able to find that for you, those signals didn't not work. 5:20 did what was expected. 6:25 did what was expected. 7:10 even did what was expected until the pattern 4 appeared and put in the stereotypical fishhook. 7:45 did what was expected, and now here we are at the open at 9:33, and it's doing what was expected. Pattern 1, pattern 4, pattern 2, pattern 4, pattern 1, pattern 2, pattern 4, pattern 5. And so as our understanding of the patterns inside of timing signals expands, I'm less and less likely to say that signal failed. I don't see these signals not working the way I expected them to as failures, so much as pointing back to a lack of understanding of what they were supposed to do versus what they did. What don't I know yet? So we're going to drill down into that. And on the NQ on the ES today, I'm going to expose those signals by unchecking the box that says show signal dots only. Show signal dots only. I'm going to uncheck that box. When you uncheck that box, you have arrived at phase 2 of learning. And sometimes it's hard to see the number. And what you can do is scroll down to the signal accessory editor, and where it says patterns, when the drop-down menu gets there, change your pattern text offset. Sometimes these numbers are hidden behind the timestamp or the dot. So to see those patterns, 4, 5, 6, and 7, you can move the pattern text offset number and make it larger. So on the NQ this morning, you can see that number is a little close to the signal. There goes our pattern 2. Aggressive counter trend trade at 9:20, crossover trade at 9:31. If you're trading the crossover trade like we learned yesterday, the risk is pretty big. Candle is very large. You're looking for a 1-to-1 RR before 9:40 to move to break even. But that was a pattern 2, and it's hard to see the numbers. Come into your signal accessory editor, scroll down, go to patterns, and now increase your pattern text offset. I'll make mine 30 and see if that pushes the numbers out away from the timestamp and the dot, where I can actually see the number. It's a little better. Let's double it again, make it 60. So now that those numbers are visible, I can reference the book and say, hey, this is what I'm expecting it to do next. So 9:20, pattern 2, 9:09, pattern 1, 8:58, pattern 2, 8:50, pattern 1. The numbers are clearly there. And in the rare occasion that a pattern 4 appears, I know what to look for and what to expect. Okay. So that's one of the first things we notice in phase two. If we're referencing the signals in Chronos, what you'll start to have to do is mentally say, hey, it's 9:18. I'm at a signal in Chronos and it's 9:18. There's a prior swing high to the left of me. It's a little extra work, but I'd honestly prefer you do it this way. And what you start to notice is that the signal at 9:18 is a brand new high. In relation to the structure to the left of it, all this candle has to do is equal or exceed the swing to the left. That's it. And so 9:18 is a brand new high. 9:19 equates the high of the candle in the middle. So remember, we're looking at 3 candles in a row. The primary, the candle to the left, and the candle to the right. And now, guys, look, a signal that yesterday you thought stunk. This program is garbage. Can't believe I fell for it. Cancel my subscription. Now you know what this means. And you can look and see, wow, since 2016, we had an understanding that when we arrived at that candle, there was a very high likelihood that the market would do what? Drop. So 3:27 p.m. in 2016 on the NASDAQ is behaving the same way that 9:18 did this morning 9 years later. The same way that a full moon does the same thing on a lunar chart. The same way that the perigee does the same thing in Bitcoin. These signals, once we lean into and understand the definitions of them, that they exist, they're part of the Parthenon of signals, right? You have Ares, you have Zeus, you have Athena. There are all these gods in the Greek Parthenon, that wonderful word. It's fun to say. Say it. You'll have a great morning if you do. Well, pattern 5 is Hades. It's another character in this cast of timing signals. And so as we approach 9:43, here's what I'm watching for. I can already put a line here and here and here. And when we arrive at 9:43, if any one of those 3 candles is equal to or exceeds this swing at that point, it's a pattern 4. We're not there yet, but we could come all the way back down and at 9:42 make a brand new low. Now it's a pattern 4 and might go straight up. So I'd prefer you take a Chronos approach and manually interpret what's happening on these charts. Okay. Any questions so far about that? Live here this morning during the webinar, our class started at 9:03. We had, per yesterday, a signal at 9:03, a signal with trend, an aggressive counter trend trade at 9:24 with our stop just to the left, structure telling us where it needed to be. There's our entry, a 1-to-1 risk reward target. Then we had a crossover trade here having to exit by 9:38. So if we took the crossover trade, let's just add up based on what we learned yesterday in the E-mini S&P this morning. Signal with trend from 9:03 to 9:24 was a 1.75 move. The aggressive counter trend trade had a 1-to-1 risk reward ratio. We get that for 2.5 points. We had a crossover trade here. We have to exit by 9:38. That's 3.5 points. And now at 9:38, we have another aggressive counter trend trade with our stop 2 ticks below, 1 tick below the structure candle here. Our entry is the signal candle, looking for a 1-to-1 RR based on the rules we learned yesterday. We now complete that trade exiting here for another 4 points. 8:58, if you sold the high with the stop just to the left of structure, we would have gotten out with another 1.5. So 1.5, 1.5, 2.5, 3.5, 4. Following the times that were populated on the chart, we've had these since a week ago. None of these signals are inversion patterns at the moment. None of these signals were 4s or 5s or 6s or 7s. So everything so far was stage 1. Plain old, plain Jane, vanilla Greek yogurt, 1s and 2s, ups and downs, punctures and signals with trend. Okay? Our awareness now tells us that about 25% of the time, 20 to 30% of the time, we're going to see 4s and 5s. It's going to happen. They are a part of time if we follow futuristic signals, future-based signals. Pause point for questions here. It's a lot, but I'd rather you learn it in 2 weeks than 4 years for me. I think we first discovered this or leaned into it, had an awareness of it. All right. I'm going to continue and tell you one other thing we know about timing signals. And we're not looking at Firefly today, so I'm going to pull the curtain down here on it. We'll just have the time signals there from what we were looking at this morning. If these candles close above the moving average, you'll have a crossover trade. It's very close to the 946 candle for the ES. 1011 is the next signal on the E-mini NASDAQ. Let's pull up our diagram again. As we start to move into phase 2 of learning at the 8 to 12 week mark, there's an awareness that inversions occur. They occur about 20 to 30% of the time. Empirically, anecdotally, I don't have hard stats on it. I can just tell you, having stared at thousands of these signals over nearly 20 years now, it's about a quarter of the time. And so they are real, they are integral to time signal study. They are not an accident. There are, as I begin to move into phases 2 and 3, there are no bad signals. Now, that's an audacious claim to make. That is, of course, something the vendor will say to you, hey, when you buy my program, there are no bad signals. And then you start using those wonderful words like BS and fraud and run from this guy. But hear me out. Are there any, is the 38% retracement bad if it goes to the 62 and bounces? Are fibs fraudulent if one level is violated and another level is respected? Or was there more to it? Were we learning more about what was happening in the market at that time because the 38 wasn't respected and passed through? There you go. No, it's just telling us something. Well, inversions or reversals at these signals are telling us something, but predictively, based on time. And so phase 2 is when you first start to embrace backwards happens here, and it's okay. I can take advantage of it. Backwards happens in Chronos. Backwards happens in Warp. Backwards happens with lunar signals. Backwards happens with apogee-perigee signals. Backwards happens in force signals, vibration. And no matter where we look, if we have a thorough understanding of it, we can leverage it. So if I notice that this is a pattern 6, for example, on a full moon signal, and I'm watching for what to do next, I can short the E-mini S&P because I know this is a pattern 6 and I embrace it. I'm not constrained by my ignorance of it and just saying, well, it didn't work. I can come back and see that this signal and this signal were pattern 5s. And now I can short it or use puts until I see it come back to and violate the prior swing. I can come back and look for pattern 4s and see that there's a prior swing low here on a lunar chart and carry this candle closes with a brand new swing low. And now I know that the very next day, there's a very high likelihood that prices are going to rise up. And according to my book, if I wait for it to come back, I can short it as it passes through the low. And this is all, for me, incredible, because if it's happening in naturally derived charts, then I can trust it even more on my Warp or my Chronos chart. When I see a pattern 5 on a first quarter lunar phase now, the candle to the left is higher. That's a pattern 5. And if I see a pattern 5 on a first quarter lunar phase, and it does the same thing that it does on a 1 minute E-mini S&P chart, to me, I feel like I'm looking at the face of God. If I see a pattern 4 on a lunar chart and it drives straight up, and there's a pattern 5, this is nature-based. This is no longer data-derived. This is something that happens in the world that I live and breathe and move in. And if 4s and 5s are doing the same thing that they are over here, if a 5 drives down and a 4 drives up, and I'm seeing those signals in nature too, whoa. So as you move into phase 2 of your learning, and phase 3, which I'm going to teach you about now, I want you to think of it a lot like the James Webb telescope. Scientists thought they understood a lot about our universe, and then they sent this thing up. And if you haven't done some studies and looked into what the James Webb satellite or telescope does, it's incredible. But they learned things that they thought they were sure of. For example, one thing they discovered is that galaxies started forming way earlier, pretty much close to the Big Bang, right after. They're like, why were there planets and stars organized in subsystems within seconds, anecdotally speaking, of the universe forming? We didn't think that was possible. But the scientists didn't like go out, get drunk, snort cocaine, and abandon their profession and say, oh, man, it sucks. There's new stuff. Ugh, we were wrong. We didn't know about any of it. Same thing is true for what I'm showing you here. I want you to keep that in mind. It's very important I present it this way, I've learned. There were things that we didn't know that we started to learn. Backwards happens in time. And it happens across the entire spectrum of predictive tools that I'm aware of: vibrational analysis, energy analysis, lunar, solunar, data mining. It's consistent, which is good news. If it's consistent across everything, it's fundamental. It's Fibonacci status. It's primal. Phase 3 is interlinked with phase 2. Phase 4 brings everything together. In phase 3, what we start to notice is that when the patterns start to go backwards, they occur in sequences. Backwards signals. Here's how I used to tell myself: hunt in pack of 2 or more. Where there is a pattern 5, you will have a pattern 4 following it. Where there is a pattern 7, you'll have a pattern 8. They tend to occur in sequences. They never occur isolated. It's as though a new drum beat starts. If you've ever seen a DJ at a dance party, he's got YMCA playing on the one CD, and he's mixing up I Will Survive by Gloria Steinem, and he's playing this song, but this song is starting up and takes over for a while, and then he goes back to the original song. The signals will stay normal polarity most of the time, but there's a point in the sequence where backwards starts to happen, and it's not usually isolated to one signal. What we do is we begin looking for that with a signal in Warp, or a tool in Warp, that I'm going to exemplify for you real quick. Before I do, let's just review what we learned yesterday. 946 is a signal with trend. It closed below the moving average. When we have the signal with trend, our stop goes above the dotted blue line. We pull down. We're looking for a 1-to-1 RR to go to break even, but we have to exit at 950. We can't exit until the close of the candle. So on this trade now, we have +3 points. At 950, we have an aggressive counter trend trade. We look left and the structure is further out than the actual stop of the 950 signal. When we have that phase 1 learning, we need to look and address local structure here. The low of this candle +1 tick. The close of the candle is our entry with an aggressive counter trend trade. And now we're watching for a 1-to-1 RR. 1-to-1 RR has just been hit live here in the group. Enter, exit, +3 1/4. So if you're keeping track, +1 1/2, +1 3/4, +2 1/2, +3 1/2, +4, +3 1/2, +3 1/4, using the predictive times. And again, we're seeing the times in the future. They do not paint, disappear, reappear. If one candle closes above this moving average, we'll be looking for a crossover trade. Okay, so all of the signals on the ES now are working. 924 came down. It was a pattern 2, vanilla. 938 was a pattern 1. It went up, vanilla. 946, pattern 2. It went down, vanilla. 950, pattern 1. Nothing special about it. We're expecting it to go higher. Okay, let me put that chart there. NQ, same thing. If you're following the rules from yesterday on the NQ, 909 was a signal with trend. We're looking for a 2-to-1 RR on that original signal. Entry, target to +$16. 920 was an aggressive counter trend trade. We put our stop above the structure to the left. Our entry is the close of the candle, very small 1-to-1 RR. Exit here, +3 points. On the NQ, if you are a baller, you can trade this crossover trade right here. Your stop would have to go above that candle. Your entry, hold on tight, some of you have accounts big enough for this, would be here. We didn't make it to 1-to-1. We have to exit by 940. That trade on the NQ would have been a loss. So that's -8. At 940, we have an aggressive counter trend trade. Aggressive counter trend trade The structure, if we look left, is worse than or equal to the big boy stop, the signal with trend ATR stop here. So I have to look at local structure or the low of the candle itself. Now I'm looking for a 1-to-1 RR with the aggressive counter trend that we learned yesterday, phase 1. And on the NQ now, using the times from today, we're back up plus 26. The next candle here closes above the moving average. That is called a crossover trade. With a crossover trade, our stop goes 2 ticks underneath the low of the candle, and we're looking for a 2-to-1 RR on the crossover trade. We got to 100%, which means we moved to break even. We got to 150%, which means we lock in 100%. You could have closed here with discretion. Mechanically, I have to log the trade as a 1-to-1 RR, entering here and having our trail stop hit there. So plus 19. Using phase 1, regular patterns, no emergence of reversals. Plus 16, plus 3, minus 8, plus 26, plus 19. So reviewing what we had yesterday, there are no inversions yet. There are no backwards signals. So everything right now does not necessitate anything else. The only place we've seen inversion signals are on Chronos right now. We had the down signal at 918, and we had the sell signal pattern 2 at 943. The next signal coming up is at 10:05. Okay, but check it out. There is another tool. Let's use this on a gold chart so we're outside of what we're looking at. I'm going to load a 1-minute gold chart on another screen. It'll populate over here. Perfect. Phase 3 is when you start to notice the sequence. Inside of your NinjaTrader platform, or rather inside of the NinjaTrader indicator for the platform, we can remove the signal dot checkmark, and this will expose those patterns. Pattern 1, pattern 2, pattern 4, 5, 6, and 7. There is even a pattern 3. But today we're just talking about the inversion patterns. Underneath, you will see a dialog box for reverse polarity. Polarity is another word for normal or backwards. And the rule that I asked for is rule number 2. Rule number 2. So I'm going to check that box. But before we look at the chart, I want you to see what I'm looking for. Let's see what I'm looking for. Pattern 4, pattern 5. What we see when we're following those signals is that the market finishes higher than the close of the signal candle. So if there's a pattern 4, when we get to the next buy signal, the market has gone higher than the close of that sell signal. If it was a true pattern 2, we would expect it to move lower and finish lower than the close of that candle, which it didn't. Pattern 5, same way. The close of that candle were lower than the price was at the time of that signal. Directionally, we are on the opposite side of the close of that candle. And the trader goes, what is going on? Why are we lower than we started at the buy time and higher than we started at the sell time? What we can do with the program is say, hey, anytime that starts to happen, anytime we get to a buy signal and we finish lower by the next signal, anytime we have a sell signal and we finish higher by the next buy signal, would you put a warning on the screen that it might be happening? Backwards after backwards after backwards signal. Can you tell me when that sequence might be starting? And so now the program is looking at all of those possibilities. And it's saying, hey, there's a really good chance the next signal is going to go opposite too. And you'll see these RevPol words popping up. Let me just state, I'm going to go to a 5-minute chart so there's not as many signals and we can kind of parse it into bite-sized chunks a little bit better. To start to see the sequences forming, for example, and I know this is a lot, but I promise you, once you see it, you're going to start to see it more and more and more. At 8 o'clock, we finish higher than we started. There's no patterns on this chart. It's just price action and time. At 8 o'clock, we finish higher than we started. At 7:10, we finished lower than we started. And the program goes, wait a minute, what's going on here? Is this one of those sequences starting? And it warns me, hey, we finished lower than we started at 7:10. Are we going to go up at 8 o'clock now? I'm going to warn my user that one of those backward sequences Michael and Ron started to notice 12 years ago might be starting now. Look at the difference. At 6:10, we finished lower than we started. So I don't get any alert at 7:10. It's like, okay, everything's normal. Ding! No reverse sequence is starting. At 8 o'clock, we finish higher by 8:40. And the program goes, that's weird. I'm going to warn my user that the sequence is still happening. I went from backwards to backwards. Maybe it's going to continue. And now at 8:40, which is a pattern 5, by the way, it's also a pattern 9, higher close, higher close, higher close. If we don't know anything about the patterns, we just know that this signal finished higher than it started. The sequence is still backwards. And now I have an alert that this thing might fishhook down instead of go up immediately. We go from 8:40 to 9:15 and the computer goes, ding! Well, that's what we expected. I ordered a turkey sandwich and that looks like turkey. It doesn't look like ham or liverwurst. It looks like turkey. When I got to 9:15, it finished higher between 8:40 and 9:15. So the sequence is broken. 9:15, I finish higher than I started. Computer goes, wait a minute. Is this one of those reversal opposite signal sequences starting up again? Is the DJ getting ready to play Macarena? I was just getting into the YMCA song. Feels like Macarena's starting to play. And so where we finish in relation to where we start is the beginning of understanding the most complex and deepest portions, fathoms of time. When you begin to understand that backwards happens. When we arrived at 9:40, if you were phase 2, you knew that this was a pattern 5. You knew that it was a pattern 5 from the book. And now on gold, it's starting to drop the way a pattern 5 does. You knew from phase 2 that that was a pattern 5. It meets the definition of a pattern 5. We also know that 8 o'clock is a pattern 6. It meets the definition of a pattern 6. But when we move from phase 2 to phase 3, we start to see that the normal up and down sequence can reverse for a period of time, that everything starts to be equal but opposite. The polarity switches. Take a look. So the rev pole sequence is looking at where are we in relation to what it was supposed to do. And we're treating it accordingly. Okay, so I'm going to load this onto a 5-minute ES chart, just so we move back over into our Parthenon. And you'll see that the signals start to appear one after the other after the other. So Ed, do you see on the ES where there's a patch of rev pole stuff happening? And then it clears up. There's a patch of rev pole, one after the other, after the other, after the other, after the other. What is it telling us? What is it delineating? It's saying at 5 o'clock, we finished lower than we started, which means 5:20 will probably finish higher than it started. 5 o'clock was a rev pole signal because at 4:35 we finished higher than we started, which means that at 5 o'clock we will probably finish lower than we start. It's a sequence. We had a 350 rev pole signal because we finished higher than we started at 320. We had a 320 rev pole signal because we had finished lower than we started at the prior signal to the left. So all of the signals now are working, but in reverse. 625 comes along. We can treat it like an aggressive counter trend trade. Or Edward, I can sell this as a CDOS, a close in the direction of what? The rev pole signal. I can take this now as a crossover trade because this is a rev pole signal. What happens at 7:10? Well, it's a pattern 4, but if I didn't know about pattern 4s, I finished lower than I started. And I'm expecting it to do what? Go up. But then look, by 7:45, it's the first time we finish lower than we started at a sell signal. Ah, that's normal. That's what I expect. So the sequence breaks from reverse polarity. And in my notes and videos in the past, you'll see I use the phrase nominal or normal polarity. In normal polarity, I expect 745 to finish higher than it started, and it did. In normal or nominal polarity, I would expect 820 to finish lower than it started, and it did. You see how it's occurring in a sequence? So phase 3 is a continuation of phase 2. Phase 2 says backwards happens. Phase 3 says backwards happens in a sequence. It's not usually just one signal. It'll be one after the other after the other. And a way to track it is to look and see, did we finish higher than we started? Did we finish lower than we started? So instead of it going up, down, up, down, up, down, it's going down, up, down, up, down. The whole thing flips like a mirror image for seasons of time, for stretches of time. Now, there's some general things that I want you to be aware of. Anytime the Federal Reserve Chairman is speaking, you'll see signals go into reverse polarity. Any FOMC day, you will usually see rev poll happening. Anytime the president is talking during live market hours, you'll see rev poll. During earnings releases, you will see reverse polarity. These are generalized observations after 17 years. Federal Reserve, rev poll. FOMC, rev poll. President speaking during the market, rev poll. Earnings, NVIDIA tells us how many chips they sold to China and how many hundreds of billions of millions of gazillions of dollars they're making. Rev poll happens. I've seen entire days of buy signals going straight down and sell signals going straight up. And I said, this software stinks, because I didn't understand there was a phase 3. I didn't understand there were patterns in a phase 2. Any questions about this progression? You can learn this in months and weeks instead of years. It took me years to get to this point. Okay. We're now nominal polarity. Now, Edward, armed with the knowledge that we have, ready? Stay with me and tell me if I'm correct in the assumption with 26 seconds. At 9:45, Carrie, are we finishing higher than we started, or are we finishing lower than we started, Wendell? Lower. What do you think is going to print in 6 seconds? Right? Rev poll. It's a rev poll signal. You see it now. 9:45 is like, whoa. So when a rev poll signal forms, fun fact, normally our stop is 1.5 ATR values above us for a sell signal. What the rev poll signals do, what the inversion signals do, the patterns 4 and 5, is they print a line on the other side. You see that, Wendell? It's like, hey, if you're going to treat this like a buy dot, I'll put the stop line down here also. So we get our bearings straight again. Make sense? If rev poll is happening again, there's the low of that candle. We're probably going to do what? Finish higher by 11:55 if that sequence is starting up again. But if you want to use a stop, I'm going to put a dotted white line down here instead of a dashed blue line up here. Now, it went up 4 points since we've been talking here. Can I be that lucky? Or is there something to the theory of this? To have it happen live, is it fraudulent? Or did it just really happen right now in front of us? Some of you have a $50 a day goal, a $100 a day goal, and we just went $200 straight up. Because what? Backwards happens. This is a real thing. And so what I said earlier when I said we're staring at the face of God, I mean, there's a sophistication to this. There's an intricacy. There's a depth to it. This is not ramen noodles at Walmart. This is a guy who makes sushi that took 6 years how to learn to make the egg. And when I bite into the sushi, it's someone who's been studying 30 years to prepare it and cut it and flavor it and season it perfectly. There's a depth to it that I didn't even understand. I thought it was a bunch of rice and a piece of salmon. No. This is not a McDonald's French fry. It is worthy of our obsession, because the deeper we go, the more that we learn, we see, whoa, these signals weren't wrong. I was wrong. All I have to do is understand what it's trying to tell me. The more I learn about these different phases. Rev pol, if it's reverse polarity, you can use your CDOS in the other direction, right? If it's rev pol, you can do a signal with trend in the opposite direction. If it's rev pol, you can do an aggressive counter trend like I just did in the opposite direction. When Phil teaches you, I'm pretty sure last week when Phil did the pro room, he uses rev pol, doesn't he? Have those REVPOLs on his screen? Some people lean into this and embrace it. But the overwhelming majority of people, I want to say 90% of BTTFT users stay phase one because it's enough. Some of you don't want to think about this stuff. That's fine. Stay here. But after a while, this is like a siren calling to you on the rocks. Nah, 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 there's a pattern 4 and 5. Oh, what's over here? And then nah, 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 there's a rev pol on the right. And it starts to lure you into what we'll eventually talk about tomorrow, which is Omnia. Omnia is bananas. Omnia explains all of it. Omnia took me 16 years, right? So otherwise, there's no way for me to know what we knew and do what we just did on the ES 5-minute chart. It's impossible. It's that understanding of watching to see where is price in relation to time. Okay. Any questions about that? Any questions about that? Okay. NASDAQ 1011 signal. Let's just get this updated really quick so we can keep track of it all. And then we'll talk about how we trade phase 2 and phase 3. At 1011, we have a signal with trend. We use a 2-to-1 RR. At the close of the candle, we enter short. We're looking for it to hit 1-to-1 RR to go to break even. And then we're watching for 150%, which we do not attain. So it comes all the way back up and takes us out at break even on that last NQ signal. Per the rules from yesterday, we get 1 tick out of the deal. Womp womp. Even less than that. Next signal is 1023. Yes, Carrie. You're getting ahead of me, but yes. Okay. Now, on this chart, what do we have? We have a pattern 4 right here. A pattern 4, when we open up our book, is very explicit about what we need to do. When we get to pattern 4, we're watching the prior swing low, which is here. Candle number 1 is a lower low. The pattern 4 sequence fires off. What the book tells us is if we're trading with trend, we have to wait for the low to be violated. We have to wait for the low to be violated. And this is called a pattern 4 trend continuation. At the very least, at 10:12, that candle closes. It's a brand new low. Pattern number 2 on candle number 1, I have a 1-to-1 RR that I'm looking for. Aggressive counter trend trade. I can do it right there. This candle comes along. It's not a brand new low. This candle comes along, brand new low. Okay. So there are 3 candles in the sequence. The third candle is the lowest low of all of them. I'm looking for a puncture through these lows to go short. Okay. Let me come back here and redraw those lines. I am going to go short if it goes through the low of the primary signal right here. I'm going to put my stop 2 ticks above the high of this candle. 1, 2. And now I'm going to treat this like a puncture trade, which means I'm looking for a 1-to-1 RR. Here is a puncture trade right now on the 1-minute ES chart. We learned about those. You're short right now with a stop above this candle, and you're looking for a 1-to-1 RR down into this low right here. We learned about that yesterday. But when you have a pattern 4, you're waiting for a violation or a puncture of the structure that formed the new low. You're waiting for a violation of the structure that formed the new low. So in this case, we have a 1-to-1 RR trade and we're done. Then we have an aggressive counter trend trade right here. We put our stop basically 2 ticks below that low. It doesn't come up at all and it fails. The pattern 4 says, wait a minute, don't go short right here right away. It has one more thing it needs to do. It needs to keep going. And if anything, you can try an aggressive counter trend trade at the pattern 4 and see what it turns into. Does that make sense? Does that make sense? So over here, it's a puncture. Our stop goes above that candle. Our entry is right on the other side of that line. I'm not quite there. And my exit would be right here. So trade's not working very well, or the trade's not working. So here I'm short. I'm looking for a 1-to-1 RR. It's plus 250. When I finished this trade, I finished lower carry than I started. So no rev pull. 1021, there's the close of that candle. And so by 1029, Wendell, I'm looking for it. It hasn't been above its own price line yet since it started. It sure looks like it's going to finish lower than it started by 1029. If that's the case, what am I expecting potentially at 1029? If backwards happens, and backwards tends to happen in a sequence, what is there a good chance of happening at 1029 as opposed to our basic stage 1 understanding of it just being sell? That's right. There's a good chance now that rev poll is starting that 1029 will be an up signal. So I can come in and in stage 3, start activating that rev pole sequence and watching to see if I get that telltale white arrow. Watching to see if I get that telltale. Target filled on the puncture, by the way. Yay us. So if we traded here, our stop is 2 ticks underneath. Womp womp. We lose that. The puncture says I'm going to go short right here. I'm doing a 1-to-1. And now using the system that we learned yesterday, stage 1, we get 4.75. Pretty cool. 1029, what are we watching for? There are 3 candles in a pattern 4 sequence. Candle number 1, candle number 2, candle number 3. This is a lower low candle. In 5 seconds, this will be qualifying for pattern 4. I can take an aggressive counter trend trade right here and put a stop right below it. This is a pattern 4. It takes out the low of the pattern 4. Now I'm at the primary signal at 10:29 in 46 seconds. I'm referencing my book if I'm using Chronos, and I'm seeing this thing is happening right now, just like this 9-year-old book. So in 33 seconds, I'll have a rev pole signal. I'll have a pattern 4 signal. I have these telltale climactic sell-off candles. Boom, new low, boom, new low, boom, new low. I should start to see wicks appearing here. Big drives down and then no, big drives down, no, and they finish higher than they started. It's a chance for me now to come in and say, wow, in 2 seconds, I'm going to try an aggressive counter trend trade with a stop 2 ticks below the low. Let me see if it goes up from here. If not, I'm going to reverse and now treat that like a puncture. I put my buy stop above the puncture candle, and now I'm looking for a 1-to-1 RR right here. If I get halfway to my target, I can move to break even. Pattern 4, trend continuation. I'm looking for it to do what? Continue down through its lows. Okay, so I have new information on the chart. The pattern 4 arrows are pointing up. The rev pole arrows are pointing up. Carrie said earlier, Mike, you can use your CDOS rules now. Say it takes me out. What if I have a candle that closes in the direction of the pattern 4 in 49 seconds? Ooh, that sounds fun. That sounds interesting. So this signal now has a white line here. It's saying, look, what if we don't treat this like a blue dot, Mike? What if we pretend with this hollow dot that it's a buy right here? Oh, okay. Then I can trade a puncture of the rev pole candle. Or, Carrie, like you said earlier, I can trade a CDOS here because I understand what's happening. There's a good chance 1029 will finish higher than it started. There's no CDOS. It's still closing lower. So phase 2 and phase 3 start to open up all sorts of interesting things. Here's a puncture, 1, 2 ticks above my puncture candle. Whoops. Buy stop. And now I'm looking for a 1-to-1 RR on my puncture, which means I'm looking for a buy limit right here. I'm more than halfway to my target. I could go to break even if I wanted to. Okay. Rev pole as well as the patterns introduce a new aspect that we can take advantage of here. They introduce a new aspect to this that we didn't have before. On the NQ, you see the pattern 4 right there, Carrie? Try along with a stop right below the low. Otherwise, we reverse into a pattern 4 trend continuation. Pattern 4, there's a 20% chance that could be the bottom. And this thing could cycle all the way up to the high of day and keep going. When it punctures, I put my stop right above that candle now. And I'm looking for a puncture. If it closes higher, I can take a CDOS and catch maybe the run back up once the buyers confirm they exist and they're there and they're powerful again. All I know is that this thing was dropping like a rock, and Carrie, it's starting to stop, right? It's starting to go in the other direction. There's a CDOS, the pattern 4 on the 3rd candle. I can put my stop below that candle, and I can reverse if it comes down and it hits me. I can come back if I'm looking at Chronos, and I pull this book up and I say, what does a pattern 4 usually do? Usually does this. Rev polls alert you to a behavior. What kind of dog is this? Is it a Schnauzer? Is it a what's a doodle? Is it a golden doodle? Is it a pit bull? Is it a mastiff? The patterns allow us to determine the personality of the signals. Phase 2 and phase 3 create an awareness that these patterns exist, that backwards happens. Once you have that awareness, you realize, oh, there's more to this than ones and twos. There's more to this than signals with trend and punctures and aggressive counter trends and CDOSes. You see the fish hook forming, Edward? It's a telltale stereotypical signal. It looks like a number 4. Here, let me drill it in here for you. It looks like a backwards number 4, upside down. See it? Look, down, fish hook up, number 4. Cool, right? It's one of the lowest risk opportunities to try for a reversal. So the rev poll function of the rule 2 of the 3 rules helps us understand when the sequence is starting. It's already started. We finished lower than we started at 1023. Will we finish higher than we started at the end of the 1032 cycle? If not, what do we do if it comes back down and breaks through the low? We're going to look and see if it keeps going down. All right? Because that's the second part of a pattern 4. All right. Pull that off. See what it does. Tomorrow's class, I hope I can really bring this home and show you where we sort of all end up with this, because it's pretty cool. I think it's pretty cool. So, yeah. What are we going to lean into tomorrow? Here's what we can lean into tomorrow. What we'll start to see is the physics of these time signals, because we're working in a mathematical system, because we're working inside of, I think, a physics-based ecosystem instead of just a bunch of people trading and a guy screaming, buy, buy, buy. There's obviously more to this. what we start to see is we can treat time like a wave. We're starting to see, as we get into tomorrow, just give you a sneak peek so you can kind of make those connections. What we're going to learn tomorrow is that the time signals are normally going up and down and up and down, and pattern 1 and pattern 2, pattern 1, pattern 2, pattern 1, pattern 2, and then carry. Then there is a wave that is equal to and opposite the primary wave. And what will happen? What happens? It happens is that we're going along on the primary wave, and then carry, we spontaneously shift to the inverted wave. This is where the rev pulse starts to happen. And then we follow the inverted wave, or the signals are backwards for a time, and then eventually snap back to the primary, and everything continues normally. There are telltale signals when this begins to happen. And what I'm doing with our other book, the new book that I'm hoping to have ready by tomorrow, I will have it ready by tomorrow, not hoping, I will have it. Advanced. This is the answer key. I figured out the structure of it all. I know when those things are happening. So for example, we know that this exists. Here's another dog, another species. When we get to a buy signal, and it just drops and drops and drops, we're going to call this a rapid deceleration buy dot. This was supposed to be a buy dot, and the plane is falling out of the sky. It is a parachute that never opens. And it will continue to fall until the next sell signal. Because the wave that was supposed to be this, carry, is now this. And if that wave is here, the turn is expected to be here, where it used to be like this. The wave, because time behaves like a wave, because it behaves vibrationally, inverted. And so now, if I have a puncture, I can hold it until the next signal. If I'm a trend trader, I'm looking to go long over here because that's usually the bottom. And so what Omnia does is it, number one, teaches me that there are warning signs. There are patterns that appear that trigger the whole reversal sequence that kick in. This, boom, 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 meets the requirements of a rapid deceleration buy dot. If you came to the edge event, you learned it. Okay. So we can spot when the sequence is about to invert. There are patterns inside of the backwards patterns. It falls now into the pattern 4. I can reference the master guidebook and see, hey, where am I now in the sequence? We're here. Rapid deceleration buy dot into a pattern 4. Reverse polarity happens. We'll have 2 highs here that'll form a structural trend line. The new low is in. If we break above the structural trend line, we'll move 1 to 200% of that zone back up. If we break below the low of the P4, we'll move 100 to 200% of the zone down, but the polarity will revert back to normal. We have an answer key. Page 26. There it is. So everything I'm teaching you here today, building off of what we learned yesterday, all boils down to this one page. And I can look at any chart on any market, on any time frame, and see what we're doing in relation to this master sheet and tell you where we are in the cycle. Tell you if it's reverse polarity or normal polarity. Is the trend reversing? Is the trend continuing? So if you're a trend trader, for example, let's come look at this chart. This is the lunar phase. This is the lunar chart for the E-mini S&P. And Carrie, do you notice we had a pattern 5 signal right here? And you see what it did, Wendell, at the very next sell signal? How it started going in the opposite direction? I can now look at the master chart. These are based on the size of the moon in the sky. And Wendell, can I make a strong case for the fact that we are right here right now on this graph? We're at the very top of a move. We're at the very top of a move, and the signals that normally go up and down are going down and up. That's what we're going to learn about tomorrow. We can actually predict when trends are reversing. We can predict when the trend, how long the signals will stay backwards and go backwards. But for today, we need to acknowledge that they can go backwards and do go backwards, because that opens up all the possibilities in the fourth phase. Okay. So the pattern 4 is done. We have the puncture here. We're looking for a 1-to-1 RR on the NASDAQ. If we get more than halfway to break even like we did, or halfway to our target, we go to break even on the pattern 4 trend continuation. When you have pattern 4s and pattern 5s, we have an added layer of requirement that we make. It has to keep going down for us to trade it with the trend. It has to keep going up for us to trade it with the trend if it's a buy signal. We don't take it at face value that it's a buy signal. You're like, wait a minute, you're a mix. You're a pit bull and a schnauzer. I can see pit bull all over you. Not that I don't like pit bulls. I love pit bulls. I think they're sweethearts. But you're like, you have the capacity for something. You could fight a coyote if you had to. But he's part terrier. Yeah, but he's part pit bull. And so we don't take 5s and treat them like 1s. We know that they have a reversal element to them. Okay. We know that they can go straight up. The other thing we're going to learn tomorrow, and I've alluded to this here, is that we can test to see if the cycle is reversing before we get to the next signal. We can test to see if the cycle is reversing before we get to the next signal the following way. And we'll go over this tomorrow. I can split any sequence of signals into thirds. I can split any sequence of signals into thirds. And what I expect to happen is that the polarity will be respected. So at 10:05, I'm expecting it to go up. At 10:22, I'm expecting it to go down. Because time behaves like a wave, I can use what are known as harmonics. I can split the waves into smaller waves. And so if this was a positive signal, the next one is negative, the next one is positive, and the next one is negative, which means up at 10:05, small drop down at 10:11, push back up at 10:16, push down at 10:22. If the cycle is nominal, I should see that. Carry down at 1022, up at 1023. Are we backwards yet? Let's measure. What's it doing at 1043? It's going down. Yay. The cycle is still nominal. It's normal. And if I look on my sheet, my answer key, Carrie, it's doing all normal polarity stuff. How will I know the trend is starting to end? If I get to the green line at 1053 and it starts to do this weirdness. The trend only starts to reverse when I get to a buy signal that just collapses. This buy signal at 1033 did not collapse. It did this. It went sideways. And then, whee. So being able to cut the cycles into splits lets me put a thermometer and measure the temperature of the polarity mid-cycle. Where are you upside down or normal? I'm still normal. Look at me. I'm going down and then I went up and then I went down again. I'm going to probably go up here. All right, cool. I'm going to watch you though over here at 1052. You should watch me because I might flip. I don't know. It might go down, down, down. And it's a way for me to put my finger on the market and say, have you flipped yet? Because you can and you do. Does that make sense? So I can come to any chart with Omnia and I don't have to have any of the patterns on. When you get to the place I got at 16 years, what you're doing is you're saying, hey, I only want to see the signals. I don't want to see reverse polarity. We'll let it come back. And now let's get rid of that. Let's get rid of all the drawing tools. And at stage 4, there is a purity. And you go, what's going on between 1032 and 1053? So Wendell, last question, Edward, Carrie, last question of the day. Which one of these sequences makes more sense? At 1023, it started to go down, which means, Edward, at 1032, I'm expecting it to do what? Go up, because backwards occurs in sequence. Pattern 4s and 5s hunt in packs. Well, if that's the case, what should happen at the next split? This is the split drawn normally. Ready? Watch this. Does that make sense, or does this one make more sense? Everyone's like, what did he just do? Do that again. Okay. Normally, I would split the sequence into thirds. I would expect it to go down at 1032. I would expect it to go up at 1039. I would expect it to go down at 1047. But when I draw the splits and I watch what happens as it passes through those smaller waves, Carrie, it does this instead. The blue goes up, the red goes down, and then this bar is closest to the green line. How did you know to go long there, Michael? Because the polarity reversed. And I could measure it in between the cycles. And now you can trade with the splits.
an aggressive counter trend trade right here. You can trade a CDOS right here, because when you achieve that level in phase 4 of learning, you know that it went from nominal polarity to what? A rapid deceleration buy dot, which takes us into a pattern 4. And now we have a descending trend line with a brand new low. I can look at our master document and see exactly where we are. And now, where am I? This just happened. Forgive me. This was here, which told me this would bounce up, which told me this would drop down, which told me this should push up, which means this might drop down at 1054. I am here right now. Here is where I am. So if I'm a trend trader, boy, there's a really good chance that's the low. And this is a place to get in at the beginning. There's no other way what I just did will work. Again, it can't be a coincidence. There has to be an element of physics and science to this, which is why people freak out on Facebook. And I have to remember, I can't get mad at the guy. He doesn't know. He has no clue that this is happening. I didn't have a clue it was happening for 16 years. So now I'm looking for a trend line. I'm looking to see, is this going to be this line right here? But that's what we're going to talk about more tomorrow. That's what I'm really interested in learning more about. Because if it's more physics and less fundamentals, I went to school for that. I can teach that. It's repeatable. Okay. So I can come up here, move my stop underneath that line. If the cycle goes back to nominal polarity, I would expect it to go up higher and higher and higher. If I want to trade in the direction of the trend, I can short it here and put my stop right above this candle. If I want to trade in the direction of the trend and treat it as a signal with trend, now I can measure what my ATR stop was below, and I can mirror it above. I can put my stop here, and then I can do a 2-to-1 RR. So phase 4 opens up all sorts of possibilities. Phase 3 opens up all sorts of possibilities. Because there is a point, ladies, gentlemen, where this happens. There is a point where this happens. It happens enough that I had to write all these things down and look to see if it was going to happen again. Does that make sense? It happens so often that I kept seeing it over and over and over again. It happens so often that it happens on the moon charts. It happens on Bitcoin. What? And now look at the price of Bitcoin right now. Does anyone see any backward signals right here? No, it is not backwards. What does that tell you about the trend? Trend is still up. Look at gold, ready? As we move into phase 4, we can look at any chart and see where are we in the cycle. Ready? 1014 signal. Let's look at the cycle. And this is a good warm-up for tomorrow. Carrie, can I make an argument that what happened here, higher close, higher close, higher close, sell dot, higher close, higher close, higher close, sell dot. can we make the assumption that maybe the trend for gold going higher is starting to reverse? And we're in backwards land. Can I come in here now and reverse the signals and say, wow, it went from a sell into a pattern 5. That's a higher high. We learned about that stage 2. Well, if that's the case, that pattern 5 just happened here. And now we're coming into a pattern 8, lower low, lower low, lower low. The next sell signal should do what? On the close of today, should push up. For how long? Into 1027, which should do what? Go down. Crazy. Any time frame. Pull it up on a 60-minute chart. What do you see? What do you think should be happening in gold right now based on this chart and what I taught you here today? What is the cycle normally? The cycle normally should have been a move up in gold at 4 a.m. and it went down. It should be a move down at 9 o'clock. Is there a good chance gold is going to start to go up and that this is just a stop run right here? Yeah. Okay, go down to a 5-minute chart. Where are we? Look at what the sequence is telling us. Here's what I see right now in gold. I see it went up at 8 o'clock. I see it went down at 8:40. I see it went up at 9:15. I see it went down at 9:40. Right? All these signals are backwards. Boy, it feels like we could take advantage of that, doesn't it? So, yeah, that's what we're going to be studying tomorrow and looking at and leaning into. And when we're finished, I hope to pass these videos along to you and basically turn you loose on it. We have now closed above the trend line and we are nominal polarity. So if I'm sitting here by myself, I'm looking at my book, I'm seeing that this happened, I'm calling this the trigger. I'm measuring how far this move was, and now I'm looking at 100% above us back to 25,219. I'm expecting price to go higher until 1108 and then down until 1120. Any questions? Before we finish, some of you are sitting here and saying, I wish you didn't show me all that. I want to just remind you that if we didn't do any of what I just taught you today, and we focused on what we learned yesterday, this is what happened live today. Ready? Phase 1, 90% of you will stay here. Signal with trend, aggressive counter trend trade, crossover trade, aggressive counter trend trade, crossover trade, signal with trend, aggressive counter trend, puncture trade. 1032, signal with trend. 1054, aggressive counter trend trade, and acetos. And then this one is acetos also, right there. So everything we learned yesterday is as much as you need. You can stay there. You don't have to change. and that was a net profitable day for you. Everyone, when I post these videos on YouTube, you can't look at it and say, but, and fraud. Bah! They won't accept it. Even after the first video they watch and they see what the rules were, even though when the webinar began, we knew all these times in advance. We have the times for the rest of the day. They never repaint, disappear, reappear. What I want you to do is stay with us. If you have a subscription, please don't cancel on day 29, because there's so much here that you haven't allowed yourself to learn yet, right? This is real. This is everything I know. And it's better than anything else out there. I know, because I've tried everything else out there. I listen to these people for a living so I can hear what they're trying to teach you. It's not fair value gaps. It's not floor trader pivots. It's not market delta. It's not, what's the other one? TPO charts and volume profile. All of those things are lagging. All of those things are manipulatable. All of those things repaint, paint, disappear, all the things. This is the only thing I've found in 20 years where I can point to the moon, the sun, the distance of the moon, vibrational sequences and signals, and see the same things across all of it. This is bottom floor basement natural golden ratio stuff. It is worthy of our obsession. It is worthy of our dedication. It's all, we're at bedrock. There is nothing below this. That's where I want you guys to live for a while. Let's start here. Let's stop here, and we'll pick up tomorrow. We'll look at phase 4, but continue now with this newfound knowledge. Don't be afraid to come into your software. If you're using Warp, uncheck the show signal dots only box. Move into phase 2. If you're comfortable with that for a while, leave it on there for 2 or 3 weeks. Come back into RevPol and choose Rule 2. Come on into phase 3. The water is fine. Phase 4 is a mastery level of time signals. And so we want to know where this is all leading, where we're headed. This is based off any time frame you can think of. I can change this to a daily chart, and everything we just learned is true. I can put this on a 9-second. I learned all of this. I learned phase 4 on a 9-second NQ force chart. I had a mental breakdown at 11 o'clock at night on a 9-second NQ force chart. Let me close this out. You can pull this up on any time frame: 30-second chart, 9-second chart, 1 minute, 5 minute, 30 minute, 60 minute, daily chart. Time is fractal, so all of the patterns, all of the signals, all of the rules, all of the inversions, all of the splits are applicable on any time frame of any chart. I don't know why I locked it up. Screen locked up. Let's close this out. So there you go. You see what happened, Ed, at the split on the Chronos chart? Just coming full circle. Sequence is preserved, but everything on every time frame. We'll talk more about that tomorrow. This was a lot. Don't worry, it's recorded. If you're happy with what you had and you didn't need to know any of this, dwell in the stage that you're in. When you're ready, if you're ever ready to move, you'll know what to do and what it means when you get there. If you feel overwhelmed by it and you don't want to use it right away, don't start looking at it until you know you're ready to. If what you're doing is working and you like it, don't change. I just want you to know in the future, there'll be a moment where you go, what is going on right here? And there's an answer. All right. I love you guys. Thank you for tolerating my manic, insane ramblings. I hope it landed somewhere. I'm doing my best to explain what I know in the hopes that if you ever need to know more, you know what to do. Catch you guys tomorrow. Be here 9 o'clock. We're going to start super fresh and early like we did today and yesterday. Bye-bye.